everyone. I'm Aubrey Hruby, and I'm a visiting fellow at the Africa Center at the Atlantic Council. And it's my pleasure to be joined today from Lagos by Samaila Zubairu, who is the president and CEO of the Africa Finance Corporation. Welcome, Samaila.
Thank you, Audrey. Thanks for having me.
And tell us, what is the Africa Finance Corporation? What do you do?
Good. The Africa Finance Corporation, we call it AFC, was established by a Treaty of Sovereign African States in 2007 to establish a multilateral financial institution that will focus on providing solutions to Africa's growing infrastructure deficit and challenging operating environment by developing and financing infrastructure, natural resource, and industrial assets that enhance productivity and economic growth of African states. Since our creation in 2007, we've deployed over $8 billion across 31 African states, focused mainly on energy, transport and logistics, natural resources, heavy industry, and telecoms. Some of the projects that we've done is the wind power, the wind farm in Kabyolika in Cape Verde, provides 20% of the energy requirements of the island. We are currently developing a wind farm in Djibouti, which is going to replace energy from an aging diesel plant, as well as imported power from Ethiopia. So typically what we do is we de-risk opportunities and then we distribute to other investors. That's what we do.
And so you operate like a development finance institution.
We are a multilateral development bank. Yes.
And so what is your investment philosophy?
So essentially what we do is we seek development impact, for the continent, as well as financial returns. So we come to development with a commercial mindset. That commercial mindset is important because we have to close transactions and we have to recover our capital so that we can apply it again. So what we do is we try to solve a problem, and Africa's problems are quite numerous. So for example, we know that this infrastructure deficit that we have reduces our productivity by 40%. We know that it deflates our GDP growth by about 2% annually. We know that we're unable to trade with ourselves and the rest of the world, because of this deficit. Just to give you some context, Africa is home to 1/3 of the world's minerals, 12% of the world's petroleum, 8% of the world's natural gas, 90% of the world's platinum, over 50% of the world's gold, 60% of the world's copper, cobalt. Some of the largest bauxite deposits are in Africa, yet our contribution to world trade is less than 2%.
And the value add is very low on the continent, right? Those things are processed outside. Look at graphite. The 80% of the world's graphite is processed in China. So you're missing out all that value add when there's so much graphite, say, in Mozambique. Exactly.
So I mean, and for us, it's important that we change that, because changing that creates jobs. We're just talking about the young population we have on the continent, 1.2 billion people, 60% of them are under 25 years old, and they need to have jobs. The only way to create jobs is to increase value accretive beneficiation of Africa's resources. And that is what we are focusing on. And that's what we've done. We've proven a case in Gabon. We're trying to replicate that in Benin, Togo, Cote d'Ivoire, Senegal, and Egypt as well. So there are many things that we're working on. Essentially just to ensure that Africa gets a better share of the value capture.
And that makes you unique in many ways because as an African DFI, you live and breathe the region. You're in the region. I mean, how do you think African DFIs differ, say, from those in Europe, for example?
So essentially, the fact that we are Africans and we live on Africa, it means we have more relationships, with the key decision makers, and that we better understand the culture, and the dynamic. We understand the risk better, and we come to the risk with the mindset that we need to get things done. We're not looking at it from a checklist perspective. we're looking at it from a development impact perspective, because there are many levers that affect why we have to get things done. You know, I talked to you about the low value capture that we have. If you look at an industry like cocoa, you know, where Africa produces 70% of the world's cocoa, and the global value chain is estimated to be $100 billion, but our value capture is less than 6%. You know, for us, moving up to 15, 20%, you know, is going to add significant value for the continent. It will address unemployment on the continent, which is estimated to be about 37, 40% before COVID. With COVID now, it's going to be higher than that. You know, in income inequality, you know, African states, you know, with all resources they have, you know, don't have money. They don't have bargaining power because commodities are bought. They're not sold. So there's no, you are essentially just price takers, you know, and not until you can change the way you trade and increase value, you are not able to do much. So we are focused on demonstrating that we can do that, because I mentioned to you of a demonstrated case in Gabon, focusing on timber, you know, where we're able to increase the value capture significantly. Right now, value capture for timber is about 85%, up from about 40%. You know, and Gabon now is one of the largest exporters of veneer. They export furniture. They don't need to import furniture anymore into the country. Exports have grown from about $350 million to over $1 billion. We're able to create 6,200 jobs and 26,000 indirect jobs from the industrial zone that we built. We built 3 ports. We're able to enhance logistics. We're able to open up the market for other minerals in the country. So we're able to assist the country diversify away from hydrocarbons. You know, and with the plans that we have, we're also able to impact climate change and the effects of climate change. So the way Africa trades now is you essentially mine raw materials or produce commodities that you export to China or Europe, where they are processed using coal-fired plants. And then the voyage of taking them there also increases carbon and greenhouse gas emissions. But if you do the processing on the continent, you would use hydro renewable sources. You would use solar or wind sources of energy. More importantly, you have lower voyages. So the greenhouse gas emissions from the voyage will be reduced. And the fact that you're going to do less processing in Germany or in Europe and in Asia and in China, clearly there will be less greenhouse gas emissions from the coal-fired plants.
Yeah, so if you take the life cycle view of it, there's less the greenhouse gases there. One of the things that's always impressed me about AFC versus some of the other DFIs is your willingness to invest in industrial growth. We know African countries today are less industrial than they were in 1980, and you see deindustrialization happening, which works against the effort of job creation when you have 18 million 1 million Africans every month turning 18. So that job creation mandate and necessity is there. And you really do invest in manufacturing and industrialization where many other DFIs don't tread.
Yes, we do that again because we're Africa focused and our mandate is very clear. We need to see how we can reduce the infrastructure deficit. We need to see how we can catalyze industrial development on the continent. And we have several examples of that. So for example, you know, one of our recent investments was in a massive petrochemical and refinery fertilizer complex in Nigeria, the Dangote refinery and petrochemical fertilizer complex. You know, that would almost eliminate imports of refined petroleum products into the country. It would increase the utilization of our natural gas in the country, and it would ensure that we have more food security on the country because of the fertilizer that will be produced from the plant. Clearly, it's going to create a lot of jobs in the country and on the continent. You know, we are building a gold refinery in Nigeria as well, utilizing the gold that exists and ensuring that we can create jobs and add value to the gold. We are invested in a bauxite production plant in Guinea. We're actually investing in our second bauxite mine. We're looking at how we can do some value addition for the bauxite before it is exported. We've also invested in the manganese mine, and we have several things like that we're working on.
And how do you
think
think
a big push
that
for us right now is to see how we can get more value capture out of cotton and ginning, which is textile and garmenting, how we can get more value capture out of cashews, how we can get more value out of manganese, out of bauxite, and out of cocoa as well.
And how do you think you can partner with other DFIs? So how does AFC work with, say, the DFC in the US?
So we're in a conversation with DFC now. I think they've approved an investment of $250 million for us, with which we would use to support the changes that are taking place with the disruptions in the global supply chain that was always there, but has been triggered by COVID. So we think that there will be more production centers closer to markets and to sources of raw materials. So we would work with them to do that. We would also encourage them to join the African Investment Forum, which is a forum of African DFIs, to see how we can de-risk opportunities and distribute investment opportunities to the rest of the world. So we formed that in 2018. It was led by African Development Bank. We ourselves are innate African Export-Import Bank, Africa 50 Development Bank of South Africa, EIB, that's European Investment Bank, IFC, the Islamic Development Bank, as well as the Bank for Arab and Economic Development in Africa. So we always try to work with partners. I'll also give you an example of something that we've done specifically. I mentioned the wind farm in Djibouti. So it started with a conversation with the government of Djibouti. We were able to de-risk the opportunity, and we invited FMO, the Dutch Development Finance Agency, and Climate Investor One, and we were together working on that project. And there we are looking at some lessons learned from how long it takes to get to financial close, and we decided that we should introduce a construction finance instrument that will enable us to use equity and shareholder loans to construct the wind farm. And thereafter, we would invite debt holders to come in. And so they will have eliminated the construction risk for them, because that's one of the big risks for project finance, construction risk and completion risk. So by building the plant, we would have eliminated that. And since we've started construction, we went to, I think literally within the last 3 weeks, we went to the Swiss bond market and we did a green bond, to raise money for the debt. So that has been done. So that's really how we work. We start by de-risking the opportunity and we distribute it to our development partners. It could be African DFIs, it could be European DFIs. We hope now it could be American DFIs as well, that will work with us to make the investments.
And how can private US investors interface with AFC?
I mean, we actually welcome that. We actually, that's one of the things that we want to do, because we have a significant growth pipeline and there's several opportunities on the continent. Just to remind you, Africa requires $170 billion to invest in infrastructure. I think about $65 billion is required for water and sanitation. $50 billion is required for energy. $47 billion is required for transport and logistics. And about $7 billion required for ICT. We've been able to get Africa to invest by itself $100 billion in infrastructure. So we still have a deficit of 70 billion. And now with COVID and the impacts of climate change, we think that investment amount is going to increase. So we see ourselves growing our balance sheet from its current level of about $7 billion to $12 billion over the next 3 years. And to be able to do that, we need US investors to come and work alongside us. And we think that they will find in us a platform with which they can reach all of Africa, because I mentioned to you in the beginning, we've invested across 31 African states already. focusing on the areas that are primary focus, and we can do so much more. So if you look at what has happened in investment, I think about 37% of the investment were done by African states themselves. I think the next was by Chinese investors, about 25%. Then we have the consortium of the Middle East, some investors, they also came in. And then you have the Infrastructure Consortium for Africa, and then the Development Finance institutions. So with support from US investors, we can do so much more. I know that these things take time. So if they start by investing in us, because we are rated A3 by Moody's and we have a clear track record, and they would see how that works, and then they can now come and invest alongside us. So they can be co-financiers with us. So first, invest in us, see how it does, then you can invest alongside us. So if, for example, we have an opportunity to invest $500 million, we can know that maybe we can do maybe 150, 200, and we can syndicate the rest 350, 400 million to US investors. We're happy to do that. We're right now in a dialogue with one group, but we think we need to have a lot more groups that we can work with.
And they need partners like you.
This opportunity, for us of working with you, we think is helpful because it can open more doors to US markets.
Yeah, and they need partners like you. I've been advising US investors for the last 18 years of my career. And the number one thing that American investors need to be successful in the market is a good partner on the ground. And so really AFC can be that, with the kind of financial sophistication and innovation when it comes to structures that can catalyze more funds. So, we're coming out of this, hopefully coming out of this COVID crisis, and there's a need for economic recovery on the continent. We have the first recession in 25 years. And, your home country, because of its dependence on oil exports, still has a hill to climb when it comes to returning to growth. How do you think DFIs, African DFIs, and AFC in particular, is contributing to post-COVID recovery? And what's giving you hope right now?
Good. A very good question. So for us, at the start of the COVID crisis, we knew that this was going to be something very serious. And the first thing we did was to ensure that everybody understood how serious it was and the importance of respecting the health and safety guidelines, social distancing guidelines that have been issued by the World Health Organization and the various regulatory authorities on the continent. And we embarked on a work from home regime. We put in place our business continuity process, and we informed our clients, and encouraged them to do the same. Then we found and looked and saw that really we're most vulnerable in terms of our healthcare delivery capacity. And what we tried to do was to see how we could enhance that. So we worked with our partners, one of our shareholders, to build an emergency 110-bed hospital in Lagos under 5 days. And then we put in place a program to build another emergency hospital of 340 beds in Abuja, working with our partners as well. And then through our Arise Integrated Industrial Zone platform, we provided support to 5 African states in terms of PPE, test equipment, therapeutics, and all of that. So that was the first step that we took, just to ensure that we can safeguard lives. And then looking at livelihoods, we increased our support to financial institutions. We increased our support to governments through bilateral loans and through currency swap agreements, because we knew that foreign exchange was going to be a challenge, and we tried to provide that support. Going forward for us, we see that this is an opportunity for Africa to reset how it trades with the rest of the world. I already mentioned our very low continental trade. Even though we have this continental free trade area coming on board, we have very low manufacturing base. And we think that this is the time for us to make those improvements, which is why we're trying to see how we can increase our value capture in the basic commodities that we produce on the continent, all in a bid to making sure that we'll become less vulnerable. Because if you look at most African countries, Anytime we have volatility in commodity prices, say crude oil, copper, gold, and other commodities, we always have a devaluation, and then we always end up going through a recession. And we think that we can't do the same thing and expect different outcomes. In fact, the definition of insanity is to do the same thing and expect a different outcome, which is why for us now is the time to do things differently. We must understand that things will not change. Nothing will change if we do the same thing. So we are happy that people are listening now, and people understand that we need to change how we trade with the rest of the world. And the only way to change that is to focus on value accretive beneficiation of our resources, so that we can create jobs, because those jobs are very important. Otherwise, the dividend of our demography could be, it could become a problem for us, and we need to ensure that we can get that, because really these are fine people that have been well educated, well exposed, they understand the world as it is today, and they need to have that opportunity so that they can contribute. If you look at Africa has really gone ahead in digital. Mobile banking has been very successful in Africa, mainly because of the young population that we have. So, we need to give them several more opportunities to be able to be more creative. African media and entertainment now, it's really on the global map. And so these are all the things you need digital infrastructure to ensure that this happens. So we need to make those investments, in digital infrastructure to make sure it happens. And then with COVID now, COVID has changed the world, so whether we like it or not, work from home is going to be with us for some time. Distance learning is going to be with us for some time. And all of this require digital infrastructure. So we must make those investments to ensure that we have a robust network to be able to continue to do what we're doing now and to do better. So Africa has gone digital, and it will continue to go digital. So our banks have been able to embrace digital transformations, and we have efficient banks now. So the banks have actually fared much better, and we think that there's opportunity for them to do more. And this is digital infrastructure that would enhance that. And the young people would also further enhance it. So it's important that we all work together.
I couldn't agree more. I think the upside of this COVID crisis will be increased digitization and increased diversification in African markets, which should mean increased resilience. So Samaila, I really want to thank you for joining us from Lagos today. It's been a pleasure speaking with you, and we look forward to learning more about what AFC is doing in the near term. Thanks so much.
Thank you very much, Audrey, and to the rest of your colleagues. Thank you for having me.